The biggest challenge for scale now is just the fact that it's become almost like you really have to find smaller deals and just kind of create your own portfolio that way. Because anything over like 15 million, you're just going to compete with Wall Street. And they're just trying to buy it. Like the Carlyle groups, all these big private equity, they're just rolling them up and they're not even make profit for 3, 4 years and then they'll exit out. So it's getting super, super competitive. Like I was just posting on my Instagram today. I was like, I used to be able to say I got offered great returns. Now I can just say I have the most expensive real estate.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Jonathan Tuttle is host of the Accredited Investor Podcast. He's also the fund manager at Midwest Park Capital, which invests in mobile home parks. Jonathan, welcome to the show.
Thanks for having me on. Excited to be here.
Hey, man, the pleasure's mine. 3 questions I ask every guest who comes on the show. Can you tell me in 90 seconds or less, where did you start? Where are you now? And how did you get there?
Yeah, well, I kind of grew up in a real estate family. So as a kid, I'd be working on the job sites or helping my dad on the job sites. So even from like 5 or 6. Then my 20s, I did retail sales for like half a decade, and then got into real estate brokering about a decade ago, and then transitioned over to acquisitions.
Got it. That's a lot of fun. When you say you transitioned over to acquisitions, what does that mean, and how did you pick the asset class?
Well, we just basically stumbled across the industry about 15 years ago, mobile home parks, and at that time, it was kind of like nobody, you talk to anybody, they're like, what are you talking about? This is like 2005, 2006. I was like, this is way early. But that time it was kind of like, I saw my dad during the last downturn and we had other real estate. And as we know, almost most people got crushed from like 2007 to like 11. And that was the only asset class, the only real estate that ours that did really, really well. We actually did extremely well. And then at the same time, we started seeing like, wow, this is an asset class, no matter what the goes on in the world, even if it's crazy, it does really well. And that's what really just kind of sparked my interest in mobile home parks.
Yeah, that's fantastic. And yeah, buying in 05 is a brilliant time to be buying mobile home parks. It's funny. It's funny how attractive the asset class has become. Before it was like, oh, you're buying what? And now it's that really makes a heck of a lot of sense. I think removing a lot of the stigma around mobile home parks too has been really good for the industry. Talk to us about, getting into the asset class. How have you guys scaled? What have been some challenges maybe that you faced, but also tell us what are some challenges that the industry faces?
Yeah, now it's as you alluded to, like 2005. I wish we should have bought a lot more.
Bought everything.
Discover it. The internet kind of happened. Podcasts started coming out. Now we're going to start to talk about it. But back in the day, like, and this is the funny thing, is when people come into our industry, they hear the old school. There's some old school courses like, oh, 10 cap. A 10 cap, like nowadays, you'll never see it. It's non-existent. But people have these expectations. Like, there's literally a park I just saw today. I was just online. There's a park for Silicon Valley, $500 million, 500 million for one park in Silicon Valley. It's crazy. You're seeing 3 caps, like in Texas, California, like low 3 caps. We actually just put an offer on a college town property, and the group that outbid us, they have 16 billion in like different commercial real estate, and they bought the park at a 3 cap, and we thought we were coming in nice at a 4.5 cap. We're like, oh, we should be good. Nope. So that's the biggest challenge right now is the people that know and get invested into it are all in, and they're just buying because you can't really replace them. It's really hard to get the zoning. Also, if you actually do want to develop them, like some states like Texas allow it, but you're basically developing a subdivision. The average double wide to $80,000. You spend $10,000 to set up the pads, plumbing, all the setup, plus the land. So at that point, you're basically developing, cheap affordable housing. So all the people that are coming into our niche now, it's usually really well funded. Very seasoned investors. It used to be mostly mom and pop, and now it's probably still around 75-80% mom and pop, but people are getting crazy offers. Like when I'm just talking about 3 caps. So they're like, wow, I can sell this park was worth 5 million 3 years ago. Now it's worth like 15 million. So people are you're seeing it all go into Wall Street now. So the biggest challenge for scale now is just the fact that it's become almost like you really have to find smaller deals and just kind of create your own portfolio that way. Because anything over like 15 million, you're just going to compete with Wall Street. And they're just trying to buy it. Like the Carlyle groups, all these big private equity, they're just rolling them up and they're not even make profit for 3, 4 years, and then they'll exit out. So it's getting super, super competitive. Like I was just posted on my Instagram today. I was like, I used to be able to say I have offer great returns. Now I can just say I have the most expensive real estate. So crazy.
So that's one of the strategies you guys are employing, is saying, "Hey, look, we're gonna stay below the buying threshold of a lot of the bigger players." I mean, yeah, that sounds like a real headwind for people trying to enter the space. I mean,
Yep.
that just you can't compete with. We saw the same thing here in Memphis in the foreclosure markets. I mean, we used to go, back when there was a lot more foreclosures, which I'm glad they're not, but even when there was a lot of foreclosures, you'd go and the hedge funds came to town, which is when I finally bowed out of going to the courthouse steps and buying homes, because they were paying 98 cents on the dollar for a home they'd
Yep.
never seen the inside of. And they
Yep.
still got to remodel it. And I go, wait, time out. Like, even if I do nothing to this, I'll lose money. I
Yep.
just can't compete with losing money. So, and especially those deeper pockets. So that's really, really interesting. So you guys are sticking to a smaller park. What are some challenges when you stick to a smaller park though? I mean, there's some unique challenges with that as well, right?
Yeah, so like you alluded to the stigma. So there's different classes. Oh, there's a scale system from like the 1970s. I forget who came up with this 1 through 5 part, 5 stars. So we try to buy 2.5 to 3.5 star. So there's still some value add, because anything two turnaround park, it's not worth our time. And then anything way above that, it's too expensive. So, and the hardest part, there's only 43,210 parks in the country. So it's very limited supply. And it's like a 5 year run basically to acquire as much and then, build a portfolio and exit out. So like a lot of people that have been in the space now are kind of adding other asset classes like self-storage or apartments or some other asset class, industrial, just because it's getting so compressed.
One of the things you started to talk about earlier was, just the new development side of it. I know a lot of the places where these parks are, new development for mobile home parks is prohibited, or very, very, very difficult to get across the finish line. But even if it were allowable, what prevents people from just going out and developing a new mobile home park? I mean, we're seeing that in the multifamily space where, cost to build maybe 400,000, or excuse me, cost to acquire a 10-year-old asset maybe 400,000, but then per unit, and then the cost to build new maybe 325. And it's like, well, why don't we just build new versus acquire old? Like, is that same kind of thing happening in the mobile home park space?
It's just the fact is the zoning to a lot of cities don't allow the stigma to have parks. So they'll give you any zoning if you have a park, if you want to X out of it. But just to get the zoning is just really difficult. And it's like Texas is one of the few states that I know of that actually allows it.
Mm.
And then even for the manufactured home side, there's I think a 6 or 8 month backward right now because of the whole lumber and supply chains. So even if you want to do that, and then the professional groups, go back to professional groups, they literally pay people to go online and Craigslist, Facebook Marketplace to look for any used homes so they could kind of poach them out, like, hey, bring them into our park. They literally pay people full time. All they do is look for used homes to transport them in. So it's just getting super, super competitive. So you have to really have some, strong relationships, try to build with the old mom and pop owners, and try to build a relationship or just stay under the radar of the bigger deals. But as I alluded to, like the cap rate's compressing. So where a deal used to be 5 million 5 years ago, it's probably 15 million, right? In today's market.
That's wild. That's wild. What are you guys doing to offset that additional cost to acquire?
Yeah, the value add component, which the good thing about our industry, well, it's not a 10 cap anymore. It's not an 8 cap. Like we look for anything over 6 because obviously with the Fannie Freddie you're still 3 point spread. So you'll still find those in the smaller deals, the 8 to 15 million. You still get that 3 point spread. Obviously, operational efficiencies. A lot of these guys are mom and pops. They don't have a website. They don't. It's old school banner science, and not even like Facebook Marketplace. Build back water and sewer if possible. Just getting some of the expenses down, and increasing rent. So like the way to add value is just like ethically raise rents. Obviously, add some new amenities and beautify the entryway and the streets and stuff like that. So the value add is buying the middle, 2.5, 3.5 star, under the radar of the big funds, and then just a value add in there. So that's only way you're going to make money nowadays. Anything over 20 million, you're just going to get like a 3 cap. So
Yeah, that's really, really fascinating. What are some opportunities that you see, or some good things maybe that aren't headwinds, but some favorable kind of tailwinds that the mobile home park industry face or has, I should say?
Well, I think now the stigma's changed. So now, like, like people like me on these podcasts, people are talking about it. So it's not looked at like when I mentioned you like 15 years ago, people know the people that used to laugh are like, how do I get involved? So it's changed that dynamic. And I think the fact that we are still affordable housing. So even if we acquire and the Wall Street's acquiring, if you look at it, it's still, the average mobile home is the brand new is 50 for single, 80 for double. A used mobile home, depending on market, 15 to 20,000. And the average national rent's like $400, I think, right now, if you take out some of the coastal cities. So it's usually a third of the price. Housing's skyrocketed, numbers coming back down, but the cost of housing is so expensive nowadays for most people. Average apartments, average apartment rents have gone up to like 1,400 across the country. And so if you're $500 and you're living on Social Security, 50% of the people are senior citizens, baby boomers. It's a place where they could still have a, quaint, nice, if it's a well-run park, quaint, nice, affordable housing. So even if the rents go up 100, $150, and you're still providing something that the cities don't want, and you're still providing affordable housing for a third the cost or half the cost. And that's the beauty about it, because you still, at the end of the day, you're still really providing something that people need. So that's what I like about it the best.
Oh gosh, yeah. I mean, those are all things that are absolutely incredible. What do you think? I mean, other than this, I mean, with the stigma changing, let me ask this: the stigma changing, and the public perception of mobile home parks getting better, or why don't we see more zoning changing to allow for them, such that new development could come online?
And that's kind of like if you listen to the manufacturer association, and then also the mobile home manufacturers, that's kind of what they're saying. Like, why should we not allow this? But it's just kind of, the cities are so set in their ways in the bureaucratic process, and Texas is more free thinking, and I think some other states are starting to lean that way. But yeah, if you could provide affordable housing where people, and there was even like a thing on realtor.com recently I just read, that actually for the last 8 years mobile homes have actually appreciated just because the market's going up. Like it always was a depreciating asset, especially in the 90s when people got like crazy loans for them. It was like a big boom that time.
Right.
But now they've actually done a case study over the last 8 years, just because the housing has gone up, and just kind of just carry it up, and it's actually appreciated. Mobile homes, it was literally in realtor.com, if you Google this, mobile homes have actually appreciated more than the average single family, which I even kind of think is crazy. I have a course to teach people how to play mobile homes, but like that just kind of backs this whole need for affordable housing. And like, just think of, it's kind of like arbitrage, like think outside the box, and whatever you've learned, the world's changing so fast nowadays, just take some of this data in and actually analyze and see, okay, this is why it makes sense. And this is why this is happening. But it's just so crazy, the fact that even mobile homes are appreciating, not just the parks.
Right, right. Yeah, and I don't know if that's an effect of the inflation of our money.
Yeah.
I think you got two things. When you have inflation, you also have constrained supply.
Yep.
So, and thirdly, you have demand. So there's this weird trifecta of things that's just causing even used mobile home parks to go up. In price, and you're seeing that across used cars. You're seeing that. I mean, the RV industry is a close cousin to mobile homes. Even there, used RVs that are 10, 15 years old are now worth 50% more than they were 3 years ago, which is,
Yeah, that's great. That's industry's booming too. Because
yeah,
COVID kind of changed a lot of things, because now people want to spend time with families, and it's lockdown. So like, we can just travel the country. The school's online anyway. And so that's what made the RV industry boom at the same time.
yeah, yeah. And those are all very, very closely related. And actually, manufacturing wise, you go like this, northern central Indiana, like you get a lot of the RV builders, you get a lot of the manufactured housing builders. I mean, I don't know why I think of that in particular, maybe because it's where I grew up, but you see a lot of those, and it's just, industries that are booming, but also way behind. So what are you guys doing? I mean, I'm imagining, that you guys, well, maybe I'll just ask a question as opposed to asking a leading question. Do you guys do park owned homes, or do you guys just do lot rent?
Well, you always prefer just to basically own the land, and just rent the lots out. And even in the Fannie Freddie, the Duty to Serve Act, which it has to allocate 37% towards affordable housing. One of the stipulations is it has to be like less than 25 park-owned homes, depending on the size of the park. So ideally, you want the tenant to own the homes, and then you just rent out the, lots, basically. So you just want basically the cash flow and not having the headache. So it's kind of what makes people appealing to this industry is like, hey, it's like all the same premise of an apartment building, a lot less expenses, usually about 15, 20 basis points lower, because you don't own the homes.
Right. Right. So how are you guys filling vacant lots then? What's a good strategy for that?
It's super, like, you want to buy a park that's already full. That's the easiest solution. Just buy a nicer asset, because it's like I said, there's groups out there that literally have paid people full time to, scour the internet and try to bring in new homes or poaching homes. So
Yeah.
it's hard
That's
to
a,
compete.
that's a good caveat emptor there for people looking at vacant lots or vacant parks. I'm thinking of one. There was one here recently that came up in one of our submarkets, and it was a smaller park, maybe 25 or 30. It was family owned. She was the last owner and was in her, very late stages of life. And there was one home out of like the 25 or 30 that was there. The place was vacant, and they were still asking, what was it, $30,000 a pad. And I'm like, this doesn't make any sense. And you're confirming it, because you go, wait, you can't even get houses. Who cares if you even got it for free? You're still going to be a very hard challenge to get houses on that
Yeah.
vacant piece of land. So that's really interesting timing.
Yeah, and even like if you look at Texas right now, which is even crazier, lots that were like 50 to 60,000 a lot is going for, I'm seeing stuff for 100 to 120,000 per lot right now. It's like crazy in like Houston and Austin. Like even Elon right now has his own there's a Starlight City, whatever it's called, his mobile RV park. That's where he lives, well, apparently. So it's crazy
It
nowadays.
is, man. It's fascinating to watch industries like this and how they evolve and change. You've certainly shared a lot with us today that I think is very industry specific and very timely, but also I think just a very clear picture of where we are in this industry right now. So thanks for doing that. Let's jump here into the final four questions, Jonathan. What is one digital tool or resource you find you can't live without?
Uh, I would say just it's generic, but my phone, because every app and every software, because I can't just have just not one software. I have to have hundreds of every software I use. Like I have a digital marketing agencies on the side too. So I use every app, basically software possible.
That's fantastic. If you could help our listeners avoid one mistake in real estate, and maybe we'll keep it as it particularly applies to mobile home parks, what would that mistake be? And then how would you avoid it?
I think for one, just having the right expectations, because people sometimes, even if they reach out to the fund, they're like, they have the old numbers in mind, and just understanding it's a whole, like you just alluded to, it's a whole different world right now. And if they were personally going to go buy the first part, just make sure you do the due diligence, make sure the zoning is going to transfer, see what the real estate tax is, because maybe Farmer Joe, who developed the park, was really in with the city, but once you take it over and you're from like a big city or outside, they're like all of a sudden those real estate taxes are supposed to be $10,000-$20,000 are like 40,000 now. So that kind of factor that into it, and then also just just basically do your due diligence and really kind of, if you're going to get into the industry, just help the industry grow. We need more people that are going to help the industry grow in a bright light, basically.
That's fantastic. When it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
Well, I guess like I go to my digital agency. I actually have a scholarship for HVAC students. So it's kind of like mobile home parks, and like the plumbing and HVAC industry is a shortage of workers. And so what I do is I take a portion of my revenue to go back to college kids. And then I also do like homeless dog events I do a bunch of different charity work, but those are my two biggest charity events I'm a part of.
Yeah, and I think if I'm not mistaken, you have one of the largest, what do you call it, non-company backed dog events in Chicago
Yeah.
for homeless dogs. So that's really, really cool, man. I love that. And I also love the the HVAC school sponsorships. The need in skilled trades is so great. I mean, that's fantastic. I love what you're doing there. Jonathan, for listeners want to get in touch with you or learn more about you, what is the best way to do that?
Sure. Yeah. Midwest Park Capital is the fund. We're doing one-off some deals right now. Our next raise will probably be this fall, but depending on when you hear this, in 2022. I also, if you're an credit investor, have a mobile home wealth academy, which teaches people how to wholesale mobile homes, but also how to get their first park, or just Facebook or Instagram, Jonathan Tuttle.
Gotcha. Okay, real quick, can you very quickly or very slowly actually tell us the name of the mobile home? What was it? Where the education component you have?
Mobile Home Wealth Academy.
Mobile Home Wealth Academy, and then the name of your website.
That's Mobile Home Wealth Academy for that website, and then for the fund, Midwest Park Capital.
West Park Capital. Okay, cool. Jonathan, thank you for your time today. I do appreciate it.
Thank you for having me on. It was fun.